Let's move on then and put the spotlight on stocks on the editor's radar. M&M Finance and Chola Investments. And Nikunj, if we just go by the kind of Q1 net interest margins that they delivered, and what Morgan Stanley's latest note had to say is that there is going to be downside pressure on the loan yields.
Well, we picked up these stocks purely based on the Morgan Stanley report. And again, post Mahindra & Mahindra Financials, now Chola, they have the same thing, that it's a tactical idea where they expect the stock to underperform in the near term. That typically means that Morgan Stanley feels that there is going to be more selling and the flows in the short term are going to be moving away from NBFCs, and especially for Chola as well as Mahindra & Mahindra Financials. But what's the underlying thought here, Avanne? The underlying thought here is that interest rates are not going to come down in a hurry. When interest rates they go higher, banks always do well. When interest rates they peak out, if the underlying credit demand and if the credit standards are strong, then NBFCs they tend to outperform. I think we've seen that move already, let's say from June to August, where most of the NBFC stocks have skyrocketed. But whether it is tomato prices or whether it is onion prices, inflation ain't coming down. If inflation ain't coming down, interest rates are not going to come down. And typically that's the time these stocks, they will start underperforming. So look at how the movement really has been for some of these stocks here. Right up there when markets got a sense the interest rates have peaked out, these stocks started outperforming. Here interest rates is not going to peak out, inflation is back. These stocks, they tend to underperform. Be they expensive. Very, very expensive by any kind of any yardstick. For Chola, it's CV. For Mahindra & Mahindra Financials, I think it's a rural economy. Both these triggers have been played out. So I will not be surprised that after the recent run-up, because of what the opinion from Morgan Stanley is, and given where the valuation and interest rate dynamics are, these stocks may actually underperform in the short term. That does not mean you short them, but these are stocks where you should not participate, at least in a decline.
It would be interesting as well, Aisha, to find out what our experts make, but that's the editor's take. No upside triggers for now.